What's up guys, Roger here with Vantage Realty and Home Loans. This video we're going to be talking about investor loans. So those of you out there, which I know there's a lot of you, every year I talk to so many people who are like, I want to invest in real estate. I want to invest in real estate. This loan program is for you. Okay, so if those of you don't know me, I am a California real estate broker, mortgage broker, newly Arizona real estate broker, mortgage broker. So I've been in the industry for 12 years. I own a couple properties, so I've been around the block. My job basically every single day is helping people buy their dream home, buy their dream investment properties, and refinance their mortgages. So that's a quick synopsis of who I am if you're new to the channel. And by the way, if you find this video valuable, please leave a like and subscribe. So again, today's video, we're gonna be talking about the investor loan. So this is for the person who doesn't have any income. Okay, so if you don't report any, or maybe you have income, but it's not reported, right? So there's a lot of people who make money under the table, or you have a pile of cash sitting somewhere and you want to invest in real estate, but of course you can't go to Wells Fargo and say, hey, I don't have a job, can you give me a loan to buy a house? They don't do these types of loans, but thankfully I do. So if this is you and you're interested in this program or buying real estate in California, Arizona, you could always schedule a call with me. So anyway, the technical name for this program, it's called the DSCR. So what does that stand for? It stands for Debt Service Coverage Ratio. So basically, the bank is essentially looking at a piece of property as a business. And the brief overview of how you're getting approved for this loan is very simple. Again, the bank doesn't care if you have income, whether you're working, not working, they're looking at a piece of property as a business, right? So this home is a business. So all they're looking at is, does the rent that it's gonna produce, right? Because it's an investment property, you can't live there. Is the rent that this property is gonna produce, is that rent gonna cover the mortgage payment? That's all the bank cares about. Very, very simple. Is this property gonna bring enough money to pay us? If it brings in more than that and the owner makes a profit, great, but they just wanna make sure this mortgage gets paid. So that's why it's called Debt Service Coverage Ratio. Okay, so the ratio is 100%. So I'm gonna go into a little bit more detail, but that's essentially what this program entails and how it works, because it might sound crazy. People might say, oh my God, this is back like 2008 and they're just giving loans to, no, they're not just giving loans to anyone. There is a science behind it. It does have to make sense for the bank. They're not just handing out these loans to anyone. They do a very thorough rental survey, which I'll get into. Okay, so here are the basics of this program. So number one, you need at least a 680 credit score. 680 credit score, the maximum loan amount that the bank will allow is $1 million. Okay, so 680 credit score up to $1 million. You need 20% down as the minimum. You can't do less than 20. So the interest rate, if your credit score is in the 680 range, your interest rate is going to be a little bit higher. It's going to be 5% with a 1 point cost. So like I mentioned in my other videos, 1 point means 1%. So if you got $1 million loan, 1 point is $10,000. If you don't want to pay any points, you want no cost, no origination, the rate would be 5.35. So that's if you have a 680 credit score. Now, let's say your credit score is 740. If you have a much better credit score, your credit score is 740 or higher, again, you can get $1 million loan. The down payment drops to 15%. You can buy a property with 15% down if your credit score is 740 or above, and the interest rate is going to be much better. So the interest rate, if you want to pay 1 point, is going to be 4.5%. The interest rate, if you don't want to pay any points, is going to be 4.9%. So better than if you had a lower credit score. But again, that applies to any mortgage, whether you're using this loan program or any loan program, you want to work on your credit score. You don't want to pay a higher rate. You don't want to pay higher fees. So how does the bank determine how much rent this property is going to produce? The way they do it is called a rental survey. Okay, so basically if you've ever bought a house or know how the process works, or if you own a house and you've refinanced, the bank always has to do an appraisal. Okay, so an appraisal is, what is this home worth? And how do they determine that? They look at the surrounding homes that have sold in the area. How much are they selling for? How similar are they? Do they have more upgrades, more features, less features? And they adjust the price based on the sale of that property and they'll add value or decrease value based on the features, right? So a house right next door sold for $700,000 and yours is exactly the same, but yours has a pool. Yours might be worth $730,000. So they'll add a little bit of value based on the features. They do the same exact thing for the rent. Okay, so you have a property here, let's say in Los Angeles, California, and they're gonna look at similar properties nearby that have rented. Okay, so I'm still trying to figure out where they get this data, but they get this data somehow. So they find out what similar properties rent for. They take that number, they take 75% of that number because they're factoring in vacancy factor. You might be in between tenants year to year, so they knock off a little bit based on that. Okay, so let's say they find, a house next door that rents for $5,000 a month. They'll take 75% of that, which I believe is $3,750. So the rental number, just like an appraisal, right? Let's say they get an appraised value of $700,000 based on comps. They find a rental property that is like a comp. It's renting for $5,000. They deduct 25% for the vacancy, and the rental number is going to be $3,750. Okay, so what's the mortgage payment on the property? As long as the mortgage payment on the property is also $3,750 or below, that loan is approved and it qualifies. Okay, so that's how they figure out if this loan is essentially going to work. It all comes down to the appraisal and the rental survey. Okay, so if they come back and they say, well, the mortgage payment's $3,750, but the rental survey is $3,000, we can't approve this loan. That has happened where it's a little bit under. Now, there's one fix in case that happens. So let's say you're an escrow, you're buying a house, they do this appraisal, they do this rental survey, and the rental survey is too low. It's low by, let's say, $100. One option that you have is switching the loan to interest only. You switch the loan to interest only, and that payment is now less than the rent. It qualifies. Very, very easy and simple loan. You just have to have a good credit score, and it's all gonna come down to the appraisal and the rental survey, okay? That's it. So the rent covers the mortgage, you're good. Doesn't cover the mortgage, we switch to interest only. If that doesn't work, sorry, this home does not qualify for this program. Okay, so this is for all the investors out there who have cash, want to get in the market, want to invest in real estate because it's going bananas. Real estate went up 20% last year, 30% in Phoenix. You want to get in on this action. The debt service ratio loan is the way to go. It's the investor loan, is what I like to call it. So a couple of other requirements or just things you should know about this particular program. You do need reserves. Okay, so besides your 15 to 20% down payment, you need at least 6 months in reserves. So again, if the mortgage payment is $3,000 a month, you need 6 months of that $3,000. So 6 times $3,000, you need $18,000 in reserves. This can be in a checking, savings, stocks, retirement, or even crypto. The bank will now accept crypto as your down payment. The bank will now accept crypto as your reserves. Okay, so you need 6 months of reserves. The bank just wants to know you have a little bit of extra money set aside just in case the property is not rented for a couple months, you can pay the mortgage. So you need at least 6 months of reserves. One other thing to know is you can actually use this program for up to a 4-unit property. So those of you who want to get into the multifamily game, you want to buy a duplex, triplex, 4-unit, this program works for 1 to 4-unit properties. Okay, so you can utilize this for 1 to 4 units. They'll do the rent survey for each unit. And again, as long as the rent covers the mortgage, you're good. All right. So if you found this video valuable, please leave a like, please subscribe. We're bringing you all the information real estate and mortgage related. So please subscribe to the channel. If you guys have any questions, you can always leave it in the chat box below. You can send me an email, which I always leave in the description, or you can schedule a call if you want to get more in depth and you're serious about buying a property in California or Arizona. So thank you guys. Hope you have a wonderful 2022. Hopefully we see these 20-30% gains for the next few years, which I personally believe we will, because there is a huge supply and demand imbalance. There's way too much demand, way too little supply. You probably already know this if you've been looking for homes in your area or looking to invest somewhere. You're like, oh my God, there's only like 6 or 7 properties in this whole city. We bought a property in Sedona, Arizona as an Airbnb. I look at Sedona right now. You know, if you want a higher end, nicer property, there's only like 4 properties over $1 million. And by the way, if you guys are interested in learning more about Airbnb investments, which my wife and I just went through the last 6 months, we bought, renovated, and it's up and running and we're making money. If you're interested in Airbnb, please just type Airbnb in the chat box below. And if you guys, you know, if we get enough people who are interested, I'll make a whole series about our Airbnb experience. So thank you guys again. Have a wonderful day, and I'll see you guys on the next one.